Hi, this is Trading Bitcoin. I'm Leah, and we are here with Tyler and Tone from Dublin. This is going to be fun. And it's Sunday, right? So this is great because prior to our weekly close. Okay, Ty, how's everything going?
Everything's great. Beautiful day here. Sorry to hear about the East Coast.
That's true. But Justify won for anyone that watched the Belmont Stakes. So I had the Stanley Cup win, I had Justify win, and so far everything is going well. The gentleman woke me up, and now I get to watch some Bitcoin price action from the Maestro. So obviously up to a great start on Sunday. Tone, how was Dublin? Did you get into a lot of debauchery?
Yeah, no, they do like to drink around here. Last night was I had I stuck to paleo pretty much, or I pretty much stuck to the carnivore diet for the food part of my evening. But after that, it all kind of fell apart.
We're in big trouble for the carnivory situation. But so that means you didn't drink beer.
Well,
yeah.
They illegally, I was not going to be allowed to leave Ireland without having at least one Guinness.
Good. Yeah, no, delicious. You have.
But after the Guinness, I stuck to whiskey. So I mean, again, like I will not be allowed to leave Ireland if I'm drinking tequila walking around downtown Ireland. So whiskey will be my drink the rest of the rest of my stay here till Thursday. Acceptable.
Ty, actually, something I don't know about you besides the fact that you love popsicles and Coca-Cola. What is your drink?
I love Lefroy.
And I know you like Grand Marnier, actually, but that's obviously craft dinner.
Yeah.
Okay. Well, so it's 9:15 a.m. and we're discussing alcohol. Let's move to Bitcoin before we look like serious alcoholics, Ty. That was my fault. I did bring that up. I'll blame being 27. I'm tired.
All right, I guess that's my cue. All right.
Yeah.
Keep an eye on the chat for us, please.
I got it.
Yeah, I've been like, I don't know, I got caught up in stupid Twitter beefs again. At least the Ripple trolls are starting to, taper off.
No, you got a new chat.
Yeah, I got some in chat. Yeah, there's always some in chat. Yeah, well, let's do it. Let's just go straight to the charts. Trying to remember how to do screen share. Like I said, last night was rough. All right, here we go. Oh yeah, the workshop. The Dublin workshop has come and gone, and London is down to 1 seat. Wow, that one's selling out quick. So if you're one last person that is trying to get into London, I will after this thing says sold out, I will contact the venue and I'll see what I can do. Maybe they can give me, a few more seats, or maybe the venue has seats, or we'll see what happens. Maybe I can squeeze a couple more in, but can't promise. So hurry up. After that, I'm in Montreal. Boston just got added. If no one signs up, it'll obviously be removed. This way I don't have to drive there. And so yeah, I'll still have one more week before Vegas, so I'll need to figure out where I should do one, if I need to do one. Other than that, please check out the educational section. The Learn Trading is now there. Hopefully I'll have time to update it and give you guys some more resources. And if you enjoy these videos and you like my work and you would like to support my work, please check out the affiliate section of my website, though I'm not sure why this tour guard sometimes doesn't show up, but it is there. So you might want to check your ad blocker. My website does not have any ads, so feel free to whitelist it. And all right, let's go to the charts. I tweeted something out that most people don't like, as usual. So I used to tweet out these elaborate, cool-looking charts all the time in the past. The thing is, they were kind of really time-consuming, and to be honest, I thought this was going to be a quick one, and this took me over an hour this morning. I wanted anyway. These things are not that easy to make because I don't want to overlap other charts. It was a royal pain in the ass, so I have to complain about it. And it's just, I'm pointing out once again that the current environment to me is not much different at all. Is not much different at all from what we saw in 2014. And I'm still looking at the August period of 2014 when we broke below the 50-week moving average. Similar to the current point in time, there was one bullish week right after, maybe I should zoom in. There was one bullish week right after the drop under the 50-week, followed by a somewhat bearish week that wasn't as bad as the big bearish week, followed by 2 weeks of consolidation, followed by a big drop and two more decent drops. But notice how the moving averages are all bunched up, the 7, the 30, and the 50. This time around, little picture is a little bit different on the moving averages. The 7 and the 50 are about to cross over, but the 30 is still way up, and that's because of it took till August for this to break down back in 2014, and now we're breaking down in June. So we're basically a good 2 months ahead, and that's why the 30-week moving average is so far higher. But other than that, it's identical. So if we stick to the script, next week should be, you know, a flat week around 7,000, and the following week. So I'm gonna, because we're moving faster, I think that these next 2 weeks are gonna be 1 week of flatness, and then there's gonna be a drop the week after. And my target is, I circled a date around the first half of July, so somewhere between, you know, the 10th and the 16th, and my price target is 49.75. And the reason why my price target is 49.75 is if here's the daily chart, and again, check out the comments. This is on Twitter. This was the prior high. Let me scroll down a bit. This was the high back in November. The high I thought was going to be the high for the year. I, of course, took that off the table the moment we went back to that vicinity, and I was bullish throughout this whole part. And this line has been critical ever since. We broke below it twice, but also look how it held us support back in March, and how it held us support back in April. And now it's acted as resistance. On top of that, we just had a 9. Here's a zoomed in version of the daily chart. Here's a 9. If you were blindly trading the random number generator, your long trade when a green 2 goes above a green 1, your 9 tells you to take profit. All profit, some profit, your choice. Your price flips telling you to go to cash. And when this red 2 in the last 24 hours started trading below this red 1, that was the time to go short. So at 74.50, the indicator told you to short. And finally, here is the 12-hour chart. I had to, like, you know, scrunch this thing a bit. I took a look at the RSI, sorry, the MACD. The RSI was also not great, and CMF was also not great, but I couldn't fit all of them into the tweet. So I only focused on the MACD. And this area here reminds me personally a lot of this area here that we dealt with in late March, where we bounced off and it got above the 30-day moving average, just missed the 50 and went back down. So here's a similar situation. We went above the purple, which is the 30-day. Sorry, not 30-day, it's a 12-hour chart. So 30-period, 12-hour candles. Got rejected by the 50. It looks like this is now a no-go. We're back to the bottom of the symmetric triangle. That doesn't mean much. I know Nick is probably kind of happy right now if he gets divergence, which I don't think that we will. And I would say below this thick red line is a huge acceleration drop down, which is just above 7,000. Notice how the volume is tapering off, and all of your spikes are happening on selling days. So there's lots of selling pressure here. Your MACD is rolling over, and none of this looks good at all. The weekly is on a 4 of 9, which is why my target is the first half of July, because I am looking at 5 more weeks of downside, I have no idea exactly what, I mean, no one knows what day the bottom's going to be in, but that's my current outlook. By end of day today, everything can change because the price will change and I can't predict the price. But like, I don't know how anyone can be bullish right now. It doesn't mean that we can't bounce and go to 12,000 tomorrow. Who knows what can happen. But as far as the technical picture is concerned, I just don't see any bullish signs. I pretty much, I'm gonna give it back to Ty in a minute. Here is that 12-hour chart. The CMF is showing you some divergence here, right? But again, you need to reverse the price first. You are on a 6 of 9 on the 12-hour. It's possible that, you know, 2 more candles and it takes a break. You're already at the bottom of the trend line. It needs to reverse fairly quickly, but I mean, these moving averages are going to keep going lower and they're going to act as resistance. Here's the 4-hour chart. The 4-hour chart is not looking pretty either. It's on a 6 of 9. So again, there could be some, you know, dead cat bounce coming up soon, and these pluses are deferring the sequential 13 until we close below 7,100 or so. And then that would actually lower than that, below 77,050 will finally give you that elusive 13. The 1-hour chart is fairly neutral, but you're now coming back to the lows of the morning, which is not good at all. 13 is coming up soon, so we'll see. That's about it. Tyler, I'm gonna give it back to you. Let me know what chart you want me to pull up and what time frame, and we'll see what your thoughts are.
Great, thank you. Tone, could you pull up your, I think it was the daily chart. Yeah, the green dotted line below the price action, where is that?
One second, let me, I turned off my annotations. Oh, geez. Why do they look like this? Oh, here we go, much better. Yeah, my annotations are back. Let's take a look. Let me make this full screen and like that, and like yay, and here we go. So the green dotted line is the lowest point in the sequential on the way up to a 9. So that would be this candle here from the 29th of May that had a low point of 7,040. So that dotted line is 7,040.
Okay, great. I thought it was right about that. I am neutral at this point on the short term, but I turn negative with a drop, and it just has to be a penetration below 70.26, 7026, which is basically the lows of those 2 candles you just pointed to. I believe it was the spike wick low on one of those 2.
Yeah, we're probably using different exchanges. This is Bitfinex. So
exactly.
The low is 740. If I was using, let's say, Bitfinex and the low was 729, that's where this dotted line would be. It would be at 729. Okay,
perfect. So to me, that's where, unfortunately, all hell breaks loose in terms of my analysis. What has just happened is we have turned all the stop and reverse points at all time points negative. There were 2 or 3 or 4 that were hanging on by their nails until last night. Now they're all negative. On the Bollinger Bands, what we've seen is deterioration of all the midterms, the daily, the 12-hour, all the way down, but we're still far away from breaking below the lower line on the weekly and the 3-day chart. And that's what I think we're about to do, which will take us down to around the 5,000 level. So at this point, what I am looking at is the possibility of a bounce right here. We did get down to 71.75, but we need to get down to 70.26 on a penetration. And at that point, I have a short-term target of 6,300, which was a short-term target I had before when we were bouncing between 7,000 and 72. That remains the same, but I see that as only a short-term buffer, but it could result in a decent bounce from the 6,300 level back up, depending on what the sequential counts are doing at that time. Maybe there'll be a convergence there. So in brief, my intermediate target remains at 4,900. That will get very close to 5,000 on the close tonight at 8 o'clock. So let's just say around 5,000 on the.
And I'm sorry, that target of your 4,900, is that like what time frame is that? Is that weekly candles or daily candles or 3-day candles?
That is the phase 2 line, which is based on weekly candles.
Okay, so once a week, that number gets updated.
It goes up by $82 approximately, which is the slope of the phase 2 line. So
right.
10 weeks ago, we were $800 less. 10 weeks from now, we'll be $800 higher.
Right, but it's also dependent on the close, right? So let's say my target of 49.75 is what I'm looking for in about 5 weeks. Now, your target could be 5,300 by then, but that doesn't mean that we both can't be right, because an intra-week spike down to below 5,000, pulling us back to above 5,300, can hold your phase 2 and reach my 49.75 area. Oh, lost your volume, Ty. Nope.
So do you want a question while Ty figures out?
Yeah, sure. Let's do it.
Okay. Can strength in the US dollar lead to decrease in Bitcoin prices?
I don't think so. I really don't, because remember, strength in the US dollar is, I mean, Bitcoin is priced in US dollars, but it's not necessarily like really traded in US dollars. And strength in the US dollar means weakness in most of the other currencies around the world, especially the euro. And I think that the euro could be a bigger driver into Bitcoin than the US, because if you combine all of Europe and the potential economic problems in Europe with their banks, and there's a lot of money in Europe, just like in all of Europe, just like there's a lot of money in the US, being a first world region. I think strength in the US dollar and a big weakening in the euro can only drive the price of Bitcoin higher because of demand from the Europeans. So I don't really see strength in the US dollar hurting Bitcoin all that much.
Can you hear me now?
Good.
Okay,
Yep.
good.
Perfect.
Yeah, Ty, what do you think about my answer on the US dollar and then going back to the prior thing?
I agree exactly with what you were saying. There are 3 or 4 major forces going on with macroeconomics right now. And what we're looking at is one of them. That's hard to believe, I know, but because this is such a small market. But the crypto market is saying something, I believe, not only about itself, but about what we're seeing in the US stock market and what we're seeing with the gold market. I think there's a lot of interplay between those. What's going on in Italy can be localized unless Portugal, Spain, Greece begin to deteriorate, or if the political situation in Italy gets to the point where it looks like they're going to have to pull out of the EU. And that is not a trivial or a very small possibility. I think that is a growing possibility. And the EU is going to have to do everything they can to prevent that from happening, because if it begins to unravel, it's going to unravel very quickly. So there's a lot of things on the table. What we're talking about right now is what most of our listeners want to hear. And Tone's point about his target and my target is exactly right. I will be shocked if we get down to my phase 2 line, slightly below 5,000 right now, but rising at 82 points per week, if we don't have numerous bounces off that, and also penetrations of it that can be substantial. We had almost an $800 penetration of phase 3, but it turned it around and we closed above it on a weekly basis.
That was back in February, early February, right?
Yeah, February the 6th. And when we, when and if, and now probably will see that $5,000 level in the next 2, 3, 4, 5 weeks. To me, the close on the weekly basis is going to be very, very important, because if we close below that line on a weekly basis, then my 1,000 target is in play, and very probably Tone's $1,300 target is in play. So we're not there, but it now appears that we are going to get there. For me, we have to get below 7,026, then maybe a bounce at 6,300, and maybe not. But my short-term call will be 6,300, and then at that point I will go neutral, probably for a day or 2 or 3, and reassess.
Yeah, I'm looking at the MACD here. I know the scales are a little bit different, but yeah, so a lot of people got very happy, you know, like it looked like the MACD was getting ready to cross over, but it didn't, right? This is the situation you were in back last year several times, when it looked like the top is in and then it wasn't, and it never crossed.
Right.
And if I go back to the 2014 bear market, we actually did cross to the upside, which once again, I keep trying to point out to people, we crossed. Like the 2014 bear, the summer of 2014 was significantly more bullish for potential new all-time highs in late 2014, early 2015. Like at that point in time, if I, well, where's my price? Oh yeah, I'm way higher. Like the price of Bitcoin in this area here of June, July of 2014 was significantly more bullish at the time than we are now. And people keep telling me to look back at the fundamentals. Look at the fundamentals. I had them, and I didn't just write these in now. I wrote these in back at the time. Look, Dell embraces Bitcoin, starts accepting it. You know, PayPal was talking about Bitcoin. Bank of England is writing papers about Bitcoin. Overstock and all of this other good news. I mean, like we had lots of good news in this area, and it was to no avail. Like it's it didn't help at all. But again, if you look at the MACD, you were a lot more bullish here because you crossed over and then you crossed back down, and then it kind of all fell apart in late 2014. And look at us now. We never even crossed over, and we're now going separating again. Your histogram is going lower, and you're about to cross the zero line, which again, there's multiple ways to use the MACD. That's one of them. And if I look at the RSI and magnify that, drew that line in a while ago, and there it is, right? There's your comparison. Look how much stronger the RSI was in June to August of 2014 as opposed to the current bounds, and it's the same red line. It might even be about the same area. It's a little bit higher now than it was then. And if this red line gets crossed, and it looks like it's on the verge of being crossed, I mean, I guess it's a very good thing to get you into the oversold territory on a weekly scale to set you up. I mean, this was that 150 low, and in August, this was the $175 low, and look how much stronger the RSI was at approximately the same low in Bitcoin. That's what you want. You want this. It was more of a confirmation than divergence, but it was almost divergence. If the price of Bitcoin in August was to fall to $100, making a lower price low, the RSI would have been still way higher, giving you that divergence.
Yeah, I would not expect if and when the RSI drops down to 30, that it is going to bounce off of 30. I think because of that pattern of overbought that took us to the top, we are going to see us dropping well below 30 and staying there for a while. And that is, now I'm projecting, I have no evidence of that, but I am projecting that we're going to see a battle as we get down to that 4,900, 5,000 level, with the gloves coming off from both sides. And as we approach that, the RSI better be down close to 30, but I don't expect it will. And that will tell me that the bears are still in control. I did a quick look at the RSIs this morning, and we dropped down to 15 on the shorter time frames. But we are still up close to 40 on the longer time frames. So that could indicate a short-term bounce even from this level of around the 7,000 to 7,200, which was a reasonable bottom that put us in this past 5-week bounce that we've had, but now we're back down there again. So if we take that out, then I think the RSI and the MACD are going to go into free fall. The Bollinger Bands on the shorter time frames are way oversold, just as the RSI and the MACD on the shorter time frames are. However, we've still got a long way to go on the weekly, the 3-day, and the daily on all of those indicators. So we're getting a big differential between the momentum indicators from about 6 hours down and 6 hours up all the way to the longer. The longer you go, the farther they've got to still fall. And that tells me that we are going to hit those kind of numbers that we've been talking about.
Yeah, no, that's yeah. I'm taking a look at the shorter term RSI now. It's it still has room to the downside. Here is the daily CMF, and everything is just trending down. Like, again, I don't see much bullish things to cling to here at all. Like, I mean, the short term counts. I mean, the 12-hour is going to come up on a 9 soon, but the daily is just accelerating starting now. And going back to the weekly RSI, I'm going to have to maybe disagree with you a little bit, Tyler, in that we went grossly above the overbought 70 condition. In fact, like, because it's Bitcoin and Bitcoin has such a huge upward balance, I wouldn't even consider, maybe it should be 80, or maybe it should even be 85. Like, maybe we shouldn't be looking at the RSI traditionally 30 to, maybe we shouldn't be looking at it traditionally as 30 to 70. Maybe we should be looking at it from 40 to 80 because of, because of the way Bitcoin is.
But
and,
I would argue that if you do that on the 80, you don't take the lower up, you take the lower down, because it's showing how volatile this particular asset class is. So if you want to expand the upside from 70 to 75 or 70 to 80, then I think you've got to drop the bottom from 30 down to 25 or 20.
Interesting. Well, either way, I'm going to put them back to the traditional way, because that's how most people don't really mess with RSI parameters. We can also, look to adjust the look back period, right? Or what if we do 28 days, right? Or 30 days, right? What if we do a month? on a weekly chart. Yeah, that looks very, very different. So let me not do that. Let me see if Control Z gets me out of it. It does.
Yeah, Wells Wilder, who came up with this RSI, is the one that set it at 14. And he had done a number of studies with different look backs and came to the conclusion that that was the one that works. That was back in the 1970s.
But and was that across all time period, like across multiple candles, like weekly, daily, and sub-daily, or was that based on like a specific time period per candle?
That's a good question. I don't know. He never used candles.
Well, you know
but
what I
that
mean.
doesn't-
Right?
Yeah, that doesn't really matter. I don't have an answer to that. I know he was mainly interested in commodities when he came up with that RSI. So he was using shorter time frames. So that's a very good point. I can go back and try to look through my notes on that one.
Yeah, that would be interesting. Like if he focused all of his research on daily closes, then maybe there isn't enough research that has ever been done on RSI using weekly closes and what the most optimal parameter could be on look back.
Well, I've done a lot on the weekly closes only because that's what I use on Hyperwave. And so these other tools like RSI, I've watched the correlation on the weekly to the movement of not only the RSI, but other technical tools, and found that the 14 works best, at least in Hyperwave studies. I don't know about other asset classes or other things other than Hyperwave. So that's a very good point, and that would take quite a bit of research.
Yeah, 1 second. I guess I can't do what I wanted to do here, but yeah. So going back to that RSI that you mentioned, as I look at this, right, the RSI went grossly overbought in 2013 on 3 different occasions. Well, 2012, then 2013, and it went overbought more occasions. But if you look at the area under the covered by the RSI above the 70 line, I would say if you add up these areas, it's about the same that it was in the prior bull market. And we only briefly touched below 30. So I actually would be perfectly okay with a single touch below the 30 line on the downside to give us that low. The tricky thing that happened in 2015 or late 2014 and 2015, like I hated when the RSI just touches the 30, goes up, giving you the illusion that you've bottomed, and then goes even lower. Like this could be a very dangerous situation. In addition, if I pull the price back out, there was a huge discrepancy in price. If I zoom this will be a little tricky here. There was a pretty big discrepancy in price between this low in January and this low here. That was your other RSI. This was the RSI reading. And remember, the RSI only uses end of week's close. It's not using intra-week. So on this candle, the low was 275, the close was 323. On this candle, the low was 150, the close was 211. This was significantly lower, and the RSI finally went below the oversold condition. And lots of people thought that even this might have been the ultimate bottom, and then we still went lower. Now, because the RSI went even lower here, there was absolutely no divergence in the RSI, and I doubt there was divergence in the MACD. So for all intents and purposes, when the early 2015 low was made compared to the prior low, all of your momentum indicators and oscillators are not giving you divergence. So there is absolutely no reason to assume that this low is going to be the final low. At the time of this low, your oscillators are telling you that that low is legit, and you may want to see a lower low with a higher oscillator reading to get you divergence.
That's a great point. And I'm just going to add one other thing, which is that's what is so powerful about this consensio concept. If you take a look at where you're looking on those two lows, the previous one and the one you're pointing to now, you've got the three moving averages saying you are in a bear market, and look at the distances between them and the rapidity which they're coming down. Anyone that suspected that that first bottom was a low, if they were using consensio, would really doubt that. So even though that the RSI came down to 30, I wouldn't touch that with a stick. The next low, you had the exact same problem, except now the RSI got a little bit lower, which is good. But take a look at the moving averages. Even on that low, they are still plummeting down. What you needed to do is you needed to go sideways, which is exactly what this market did for months after that.
Oh, lost your audio, Ty.
Ty, we lost your audio.
All right, well, while Ty comes back, Leah, you have some information for us.
Yeah, sure, yeah. So if anyone, Tyler makes me read all this stuff, and he has like the original charts. So for their RSI question, honestly, so like if anyone remembers, which they don't need to, the equation for it. And Ty, whenever it works, just
does that work? Does that work?
Yep.
Okay, good. So what happened at that point, meaning the absolute low, is we had to run sideways for months to get those moving averages, first the short term going sideways, and then the short term crossing up through the intermediate term to begin to see that you've got a bottom. Now you can look at the RSI and see that it's actually beginning to move up. And now you know that you're working on a bottom, and that's probably a great place to be entering. But that came a long, long time after the RSI dropped below. It was too early to take a stab on that one. So just one other thing, and then I'm going to have to run. Your comments about RSI being overbought in both situations, I agree completely with you. What I've got a problem with is during that the period in 2014 is the size of the market and the number of participants. To me, made it a much more illiquid market compared to the run-up in 2017. So that it is more difficult to move relative strength with more participants and a much more liquid market in terms of capitalization. I don't know what the capitalization was in 2014, but I'm guessing it was less than 25% of what it was in 2017. And all that means is it's easier to get overbought or oversold. So we shall see. I think we're going to be able to test all this out in a fairly short period of time, meaning in weeks or months, because I think we're going to be retesting those lows again.
Yeah, no, thanks for that, Ty. I also want to point out that this is a weekly Bitfinex chart. Let me turn off volume for a second. There was a question on volume. And sorry, this is a weekly Bitstamp chart. You can see that on Bitstamp, the January 2015 low came in at 152. The secondary low in August, on August 24th, came in at 198, the low. These numbers were a hell of a lot closer on Bitfinex, which was the other probably most popular exchange at the time. I remember it clearly. So they were a lot closer to each other. I think on Bitfinex, this one did not go down as low. On Bitfinex, the January one stayed in the 160s. And the August one was caused by Bitfinex. and that one went down into like 170. So they were almost identical lows. If you look at the Bitfinex chart, if my memory serves me right, I just don't feel like checking it out. But at the time, I remember these lows being a lot closer. Now the Bitfinex chart makes them look very, very different. And we did have a question on volume, and please don't pay attention to the color of the volume, especially this color here. Now it is green, but we're literally talking $2 from making this red. I try not to pay attention to the color of the volume candle, because the color of the candle is based on the color of the body of the candle. And I think that's kind of wrong. I like treating the, if I was to make I should have my own volume indicator. I would actually color the volume red or green, not based on the color of the body, but based on the length of the wick in relation to the body. So on this big red volume spike, even though clearly the price had gone down during this week, the fact that the tail end, the wick of this big red candle is longer than the wick of than the body of this red candle, to me, this is more positive volume than negative volume. And I would treat the same thing here. Obviously, it's a green volume, and also the tail is longer. But in the opposite is also true. Like this candle here from November 10th, that's a green candle. It gave you a higher weekly close, but look how big the tail is, the shooting star style candle, with the wick being significantly longer than the body. And to me, this is a lot of selling, not a lot of buying. And I would color this volume red. I think that I try not to use volume in too much of my analysis for people, because I think volume is just so complicated and most people just don't understand it. And I've been criticized for saying this. For the majority of the traders, not factoring in volume might actually be better off, because they're going to make gruesome mistakes.
Yeah, I think your observations are very important about those volume candles, and is one reason why volume at price is a pretty powerful tool, because there you don't get into the problem of the color of the candle, but the price at which that volume occurred. And I think that's a more effective way to do it. I wish I could stick around for the questions, but I'm going to split now. Thank you very much, Tone and Leah, for getting up so early, and Tone for recovering from last night. And I'll talk to you guys later.
Bye,
Thanks,
Ty. Have a
Tyler.
good one.
Bye-bye.
All right, Tone. Oh, crap. We're on all three.
Yes. And Leah, how much time do you have? Or you also have to get going?
Nope. I'm with you this morning. I'm
Oh,
just
you got time.
need a little more coffee. Ready for more questions?
Yeah, let's do it.
Yes.
I thought people would enjoy looking at you this morning. You look great.
Oh, compliments in the morning, everybody, are always appreciated, for all women and men. I imagine. I can't even talk. Okay. Get me off screen share. But so have your percentages changed since the older pin that you tweeted when you went on with Tyler? And I can send you your tweet.
That's a good question. No, I got it. I just I'll just go over to my Twitter.
Yeah, and it's in our chat.
Oh, you put it in the chat. Okay, great. So let me do that instead then. Let me put my Twitter back where it was, and it's in our private chat. That's a good question. I kind of wanted to avoid this. Oh man, I have too many tabs open. Shoot.
I can screen share it if you want.
No, I got it. There we go. Perfect. Yeah, I mean, the percentages have slightly changed, but I will update this list the moment one of these targets get hit, right? So none of these targets have been hit yet, right? So we obviously have not fallen to 1.3, but before we can fall to 1.3, we have to first fall to 4975. So I sent this a month ago, I think, May 8th. Yeah, exactly a month ago. It feels like way longer, doesn't it?
Oh, I'm not on mute. Yes, it does.
But I sent this a month ago, right? So look at this one, for example, right? I had a 9% chance that the $6,000 bottom was in, and we're going to go above 20,000 this year, right? A month has passed, and the price of Bitcoin is significantly lower now than it was on May 8th. So obviously, this has to be lower now, right? Like it's almost like, again, if you're watching poker and you always see this probability change every time another person folds or anytime another card gets opened out of the deck, like the probabilities of those whose hands you see on the TV screen, the probability of winning the hands change. So for every day that we do not go higher, this probability that the 6,000 low is in and 20,000 this year is going down. I would give this at best a 5% chance, maybe lower, because the moment we go lower than 6,000, obviously both of these are off the table, right? Like the 6,000 bottom can't be in if we go lower than 6,000, right? So both of these probabilities will now be automatically zero if we go back below 6,000. So these probabilities are changing every day. So these two are clearly lower. So if these two are lower, everything here has to be higher. And the moment this area gets hit, 4975, then this goes away from my list, right? This goes away from the list. These two go away from the list. And that's what, 23 plus 20, that's 43% that I would have to reallocate to either the three that are remaining for a possible low and the possibility that the bounce off of this, assuming it even bounces off of that, is going to be the new low, right? So these would be, assuming we hit 4975 and bounce back to 5,500, the 6K would be replaced by 5K. I will, think about my percentages there, and I got to reallocate the 23% to this, and this. So yeah, they've slightly changed, but I'll republish it when something on this list, gets hit.
Great. And also happy to answer that RSI question at some point. So Tone, what do you think will make Bitcoin follow what happened 4 years ago? To be honest, there's a lot, and it's a broader question I'm going to throw in as well. Simply put, a lot of people in the chat don't, I think, fully believe in the value of historicity and looking this far back. So the two-part question is, why are you looking that far back? And then following that up with, what do you, oh my God, stop putting me on screen share. But yes, it's an esoteric question, I guess. And then, what do you think will make Bitcoin follow what happened then?
All right. So the number one reason why I am looking at 2014 is because the technical picture just looks so similar. Look, I would love to find any other asset from a technical perspective that gives me such similarity in the technical picture. I tried comparing it to the gold bear market of 2012 and 13. I tried comparing Bitcoin to the NASDAQ bear market of 2000 to 2002. I tried comparing Bitcoin to silver. I even thought about comparing it to oil's bear market of 2010 from the 147 bubble top. I've tried comparing the technical picture of the current fall of Bitcoin to other bubbles, and just the bubble of the decline of Bitcoin in 2014 just gives me the most similarity. If I didn't know that was the price of Bitcoin of 2014, and I was just looking at the price movements and the percentages and the way the moving averages were and the way the prior highs and lows were, it's just the most similar technical picture. Like, I don't want to use Bitcoin of 2014, but I'm almost forced to because the technical picture just looks so similar. Now, a lot of people don't believe, like, a lot of people have this misconception, first of all, about how much it costs to mine a single Bitcoin. You don't know, and I don't know. But the only article that I recently read about the cost of mining a Bitcoin was from that article in Canada that you and I did. That wasn't even like an article about the cost of mining, but it was mentioned in that article how some company in Canada is mining Bitcoin at around 2,500 Canadian dollars per Bitcoin. That's what it cost them. That's like $2,000 US, and that's Canada. You have to assume that in China, in Uruguay, in, I don't know, or God knows where else, it's even cheaper to mine a Bitcoin because of cheaper electricity, or, you know, government, you know, your connection to government for electricity subsidization. Like, you don't know how much it costs to mine a Bitcoin. So the cost could be significantly lower than that. And remember, for a miner, right? A miner would want to spread misinformation on the cost of them mining a Bitcoin. Like, if I was a miner and I was mining Bitcoin at $1,000 and that's all it cost me, why would I make that public? I would tell the world that it cost me $10,000 a Bitcoin to mine, creating this illusion that to keep the price of Bitcoin higher, so I can keep selling them as I'm mining them at an insane margin. Like, there's no reason for the miner to tell you the truth about their cost of production. Gold is the same way, silver. Like, but because the gold and silver mining is way more regulated, and a lot of these companies are public, it's really difficult for them to lie to you. But when it comes to mining Bitcoin, they don't have to tell you the truth. None of these are public companies. And the one that's going public is going to be Avalon, but they're not actually mining. They're just selling you the equipment. So they will, even if they go as a public company, they will not even be, they will have no statistics to provide to you on how much it costs. So you almost have to rely on third parties, or, you know, stupid miners that accidentally tell you their cost of production in articles unrelated to the cost of production articles, like that article out of Canada, right? So let's eliminate what you think you know about mining a Bitcoin from the equation. The other side of it is, like I've said before, the 2014 bear market had so much Bitcoin bullish momentum because, first of all, the whole everyone in the crypto space knew exactly what Bitcoin is. Today, that's not true, right? Like, lots of prominent people have this delusion that B Trash or B Gold or B Private or, you know, Zcash are actually Bitcoin, right? So there isn't this cohesion of all of the crypto people. Back in 2014, you walk up to the average crypto person and he's a Bitcoiner. There's a 90% chance he's a Bitcoin maximalist. Today, you woke up to the average crypto person and they think that a Bitcoin maximalist is insane. They don't believe in Bitcoin. The majority of the people want to pump their scam coins, whether it's Ethereum, whether it's Ripple, whether it's pretty much anything. And people think that they will make more money speculating on a scam coin today, way more than they believe that, like, they'll make more money speculating in Bitcoin. That wasn't true back then, right? Way more people were investing in Bitcoin as a percentage of the pie. Now, I understand that there's way more people that believe in Bitcoin today than the number of people that believed in it in 2014, but the price reflects that, right? The price of Bitcoin at this time in 2014 was $400. The price of Bitcoin today is $7,000, right? So do the math, do the ratio of August 2014 to today, which is where I think we are, do that ratio, and then you have to prove to me whatever that ratio is going to come back at, like, what, 12 times, 12x. So you have to prove to me that Bitcoin's fundamentals are 12 times better today than back then. It's not a one-to-one ratio. Of course, I agree with you that Bitcoin's fundamentals today are significantly stronger than Bitcoin's fundamentals in 2014. But are they 14 times stronger? I don't know. And the market is clearly doesn't think so, because the price keeps going down and the technical picture is looking bearish. I mean, I'm not worried about Bitcoin's regulatory issues. Ethereum, Ripple, all this other garbage has a lot more regulatory worry. But on the flip side, right? I mean, Ripple is about to be the most highest market cap company in the world, right? With their scam coin. And they can buy regulators. They can buy the IMF almost, right? Because they're on advisory board of the IMF. They're clearly by everyone that used to be in charge of the SEC, right? So they can print their own money, and they can afford, they can basically afford government officials to make them legit. So if they pay enough former government officials and current government officials in order to have the government make them legit, I mean, obviously they're going to implode like Enron in the future, so it's going to end very, very badly. But for the time being, Ripple, if Ripple is like legalized, if they win the court case that they're not a security, if they get regulatory approval, because like I said, they've paid for it to make them legit as they continue their Enron style structure, people will consider Ripple, enough dumb people will consider Ripple to be better than Bitcoin and the future of crypto, to suck more energy out of Bitcoin into Ripple. And that's how bubbles blow. And then when Ripple goes to zero, Bitcoin will then, quickly rise from the ashes. So you have to keep all that in mind. And Ethereum is almost the same, only a lot less on that regulatory front. So you have to keep that in mind, that there's a lot of momentum going into outright garbage that's sucking that momentum out of Bitcoin. And like Leah pointed out in her article, when something like Ripple, that potentially could be considered better than Bitcoin by the majority of the stupid, when that thing goes belly up, how is it going to reflect on Bitcoin? Is it going to reflect positively on the price of Bitcoin, or is it going to reflect negatively on the entire crypto space, including Bitcoin, where the majority of the people will say, well, Ripple was better technically sound than Bitcoin. Ripple was 100 times better than Bitcoin, and Ripple imploded. Therefore, Bitcoin is even shittier than Ripple, when in reality, it's always been the other way around. So you don't know how the market is going to react. Does that help you explain the fundamental picture of the space?
Nice and fun. Hey, actually, Peter gave us a question this morning. So it's a follow-up on that. So, okay, yeah, if the SEC does decide that cryptos are securities, so I'm just going to read it straight.
Well, not cryptos, ICOs, right? We gotta separate this one.
I'm reading the question straight. So
Okay.
yes, that is correct. Then potentially they could disappear overnight. But in Australia, for example, they could continue to be traded on the Australian exchanges, as the SEC only has jurisdiction in the States. Well, I'll just read it straight. I.e., those cryptos would take a hit, no doubt. But if they aren't based in the United States, they can't be prosecuted. They can only be taken off the United States exchanges.
No, that's not true.
What are your thoughts?
No, that's not true at all.
And the influence of the SEC globally. Nice.
Right, that's not true at all, right? Like the only the only places where your ICOs and stuff are safe from the SEC is like China and Russia. And China has already said that all ICOs are pretty much illegal, right? So you ain't going to China. You're welcome to go to Russia. They haven't said anything yet, but again, do you want to? As far as something like Australia is concerned, SEC has jurisdiction. Basically, if your ICO in Australia can be easily proven that US investors have bought your tokens, the SEC has a jurisdiction over that company because they sold to American investors. Now, you can avoid this as much as possible by making sure that no one associated with your ICO has any ties to Americans, nor are American citizens, nor are advisors from America, right? Like if you have an American advisor, like everyone's asking me to be an advisor for their foreign ICO, right? Like I'm an American, guys. If I am your advisor, the SEC can get you on selling to by advertising to Americans just by having my name there or anybody else's name from America, right? So if there's any kind of ties of your senior management or like anything that can like remotely through a second degree link you to pitching to Americans, and then a single American buys a single token, you are in violation of the SEC, and they can come and get you. I mean, if the U.S. government can go and get Kim.com from New Zealand, who's never set foot in America, never even had an American visa, if they can go and get him, I mean, obviously he's a higher profile, right? So they do have jurisdiction, and also all of these, like Canada, Australia, Japan, Europe, they're all working together on this stuff, right? Like one of these countries is not going to go against the other. Your only hope was China, and they're more draconian on this stuff than the US is, right? Like there's not very far you're going to be able to hide. Now, of course, they can't arrest everyone, and they don't have the manpower to do it. So you'll probably get away with it unless you get too big. Like what people don't realize is these old coins, like even Litecoin, not so much, but like the Digibyte garbage, right? Like you fail by succeeding because you are a centralized currency with a guy in charge. So you fail by succeeding because the moment you succeed and you grow big enough, Satoshi was smart enough to disappear, not only disappear, never to be known who he is. And nobody does that, right? Like look at Vitalik, he's pretty much disappeared to somewhere between Asia and Russia, probably still deciding where he's safer. Because when you grow too big and you are the guy in charge, you have a problem. This is what people don't understand about Satoshi and why you can't replicate Bitcoin in that regard. But anyway, but again, I don't work for the SEC. I'm not a lawyer. Like I don't really know how it's going to go down, but assuming that just because you're a foreign ICO, you are completely free and clear of securities regulations in the US, that's not how it works. Now, lots of laws will need to be changed, by the way, because when that law came in, everything was way more centralized, where the trail of investors was a lot easier to know, and the companies going IPO or any kind of public or private investment version of the company, it was all regulated and it's all been centralized. So it was very easy to avoid American investors. It was very easy to avoid selling to Americans because remember, these laws are more than 20 years old. So they're even pre-internet days, right? So it was a lot easier to know who's investing and who's in violation than now. So maybe these laws need to be adjusted to account for the current technology. But right now, as far as the paper is concerned, the SEC could come down. And obviously, the SEC is not going to start an international incident between America and Australia over some ICO worth $2 million. But if your Australian ICO grows to the size of Ripple, and the SEC can easily prove that you marketed and sold to US investors, that could actually cause some serious waves between US and Australia, but Australian regulators will probably get you even before the SEC goes in. So you should worry about your local SEC equivalent of your country than the US SEC first. Your other option is to go and do this out of a country that has virtually no SEC-style regulator in that country. But those are the kind of countries that tend to arrest you without, any due process. So good luck. Have fun.
Can I add to that?
Sure.
And then I have more questions. But also, guys, I don't know why you're not sending any questions and just being silly right now. Being in DC, but also being, or at least following when certain, I was working Asian equities and Japan had some taken down. The SEC actually has more than 75 5 formal cooperative agreements with foreign regulators and law enforcement, actually. And pretty much all of the agreements facilitate sharing critical enforcement, supervisory information. And honestly, the SEC can make extensive use of them in foreign governments. They even have like certain laws that like the SEC can take action to improve the consistency of the disclosure. But they have many, many times gone after companies that, again, to your point, actually, they can tie to hurting any American citizens. So again, back to Japan, they were able to take down some companies that apparently were hurting Asian Americans, they said. But they can absolutely not just, they can step in. So it's not just like that, let's say Australia, which by the way, absolutely, I think would say if the United States was like Ripple's, you know, we're going to take down Ripple or, you know, whatever the random shit coin is, Australia is not going to say, oh, no, you know, we're screw you, United States of America. We don't care if we cut ties with you. Absolutely not. I mean, we're going to present evidence, and Australia is going to be like, oh, okay, that makes a lot of sense. It's also Australia. And if anything, they're going to be like, all right, have fucking fun. Oh, sorry. Have fun. Jeez, I'm tired. Oops. Have fun in the United States persecuting them. But that it's like very much informal agreements in the United States, unless Venezuela or North Korea, you know, is doing these ICOs, of which case we're not even going to take the petro coin. So it's, I mean, so to answer that Peter's specific question, at least personally, the SEC's reach foreign globally, not just domestically, is yes, extraordinarily paramount for the rest of the world, which is also why I think we cover it so much in the morning brief. But
right, and also keep in mind that if you, let's say, do your ICO out of Australia because you're Australian and you think you have no ties to the US and you never marketed it to US, if the US SEC, you know, claims otherwise, you are making a bet that your Australian government is going to fight for you for some reason against the US government because you are so important. Now, if you are so important and doing your ICO and you feel that you are so important to all of Australia, then you are placing a bet that Australia will defend you, right? So for example, if you're, let's say, I don't know, the son of the Prime Minister of Australia, and you are going to do an ICO, and you are going to follow the rules and be very, very careful not to be in violation of SEC's global jurisdiction, then you may feel that the Australian government will fight for you, right? So unless you have that kind of a connection to the top of your foreign government, you're making an assumption that they'll go fighting for you on your behalf.
And then also, right, you know, they could take down like XRP, but not, you know, the project behind it or the tech, of which case the vast majority of these ICOs have nothing behind it. But I mean, it's nuanced, and yes, they absolutely. Anyways, back to Bitcoin, or specifically TA. This is fun. I get to see you. So thoughts on, so this is like all about capitulation. Capitulation.
Wait. We gotta wrap this up soon. I have a dinner date with Max Kaiser, actually.
All right. Then I'll make it more blanket. Do you see correlations with capitulation to volume, or what else would you correlate with capitulation that would turn this market?
Oh boy, so that's the thing, right? Like the word capitulation is. Let me go to the screen share. I think it's time to bring up George Salmon's article one more time. Oh wait, what's going on here? There we go. Let's go Google for it. George Salmon. I think it's 2 N's. Capitulation. Great article. And guess when it was written? Just before the capitulation of early 2015, right? I referenced this article many times. It's great. I'm just too lazy to write my own. Now, you have to remember that after capitulation, there is still despondency. So George talked about how, let me zoom this in. So in the 2008 financial crisis, that was the capitulation, but the low was made in despondency. And here was Bitcoin, and he wrote this like a week before the capitulation in Bitcoin. So go ahead and check this out. You saw me just Google it right there, so you can do the same. So if I go to the price of Bitcoin, and again, so this was kind of almost both, right? Like Bitcoin didn't have capitulation and despondency. This was kind of this monster week where we went from an opening of like 270 down to 150, almost a 50% fall in Bitcoin in a week, causing the bottom. This was almost both of them. Like despondency didn't correspond to a single week or a single day. It really was more like this, the following 9 months of nothing, just sitting there at 225, 250 bucks. So if you're talking about the technical view of capitulation, that's what it will probably look like. Go read that article by George Salmon. As far as what can cause that capitulation from a fundamental perspective, it can honestly, it could be anything, and it could be nothing, right? You don't need news to cause capitulation. In fact, you usually don't have news. The markets capitulate and crash down, and then everyone tries to find an excuse as to why. But you could have bad news that can cause the drop. Like, for example, Bitfinex and Tether go the way of Mt. Gox, right? That's a little, I don't even want to call it a black swan, right? That's a possibility that we know about. A black swan is a possibility we don't even consider. I mean, there could be other stuff. There could be regulation on ICOs and Ethereum and Ripple that could have bad effects on Bitcoin. We're assuming that a shitcoin implosion would be good for Bitcoin, but maybe not right away. Maybe a shitcoin implosion would be initially bad for Bitcoin, right? Who knows? So we don't know. You don't know how many miners have been sitting on coins that they mined a little while ago, waiting for the bottom to sell at higher prices, and they might capitulate and sell all of their, reserves, thinking, hey, the price of mining a Bitcoin might go below the cost of production. So not only will our Bitcoin mine no longer be profitable, all of the Bitcoin that we've been saving slowly in small amounts up to this point, may all of it go back below the cost of production that we've been mining the last 6 months. What if we sell all of it now and bank in our profit from the last 6 months of mining? Like, and these are just the things that I'm randomly thinking of from the top of my head, right? Like maybe the Mt. Gox trustee gets told to sell the rest of the coins, right? Who the hell knows? Who knows how many other coins have already been confiscated by the world governments? And what if they want to just, sell it all because they also see the price going down? Like, you have no idea how many people are sitting there. Like, I think that if Bitcoin goes below $1,000, it's kind of over. And if the price of Bitcoin goes to near $1,000, I don't have enough Bitcoin. No one has enough Bitcoin. I don't have that much Bitcoin, but I'm probably going to sell every single Satoshi I have if the price of Bitcoin goes below $1,000, because, at least I can go live in Thailand for a little bit and, not have to, and avoid finding a Wall Street job another, I don't know, maybe year or something. Who knows, right? Like you don't know at which point of the price of Bitcoin do people just say, screw it, I'm out. And for some people, that point is lower. For some people, that point is higher. And guess what? The earlier you got into Bitcoin, the lower that point is. So think of all of the people that got into Bitcoin in the last, 18 months. And where is that fear point for them? Because I guarantee you that fear point for them is a lot higher than the fear point for people like myself and others that got in before the prior bull market. So that's what causes this capitulation and a final drop in price. It could be news related, but it's usually just market driven by people's panics. And I keep saying how if the price of Bitcoin goes below 6,000, where are we here? Where's my daily chart? Nope, that's the 12-hour chart. If the price of Bitcoin goes below 6,000, all of this giant volume that bought into Bitcoin off of the last $6,000 low, these people are not going to come back with the same amount of money defending the $6,000 low. These people are more likely to sell all of the Bitcoin that they bought between 6,000 and 7,000. These people are more likely to start selling their entire stash at $6,500 before this position goes into the red. Because if they double down on this position at 6,000 and they are wrong, it's gonna be really, really bad. So, and from a mentality of a person that, like, just think about it, right? If you were responsible for the rise in the price of Bitcoin by buying tens of millions of dollars worth of Bitcoin between 6,000 and 7,000, what are you going to be thinking if the price of Bitcoin goes back to 6,500? Aren't you going to want to try to get out and potentially cause the crash down to 5,000 and then recapitalize at a lower level? This is how markets eventually bottom.
Awesome. All right. Well, I know you have a date with Max.
I got a little more time.
Okay.
If you want to keep going, we can keep going. I'm enjoying these little rants.
All right. Do I get to rant for a second?
Oh, of course, always.
Awesome. So just because Tyler actually made me read the 1978 book where Wilder's explained it, which is called New Concepts, because he is a crazy man. No, just utterly brilliant and has all these. So just FYI, right? Like when Wilder's developed the RSI, he used it based on 14 periods. And a period really at that time could be a day, a week, a month, etc. So therefore using a period RSI, it could give you 14 days, 14 week, 14 month calculation. So it's really vague, but in Wilder's RSI, right, he used something called the smoothing ratio, which is different form of exponential averaging. So people you guys shouldn't confuse it. And so for the smoothing, it's the previous moving average value plus, if I remember my calculation correctly, it's 1 divided by the n periods. Again, what I was just talking about, times close minus previous MA. So but again, just really, really important, Wilder's RSI, Tyler's correct, it was developed by Wilder, but Wilder's RSI really shouldn't be confused with the RSI figures that we use today, or that appears in any publications, even for the past I don't know, 15, 20 years. And those relative strengths calculations compared to the price movement of a security or index against the price movement of, some broad measure like the S&P 500. In other words, they show how well a particular index, right? We know the RSI is done relative to the broader market, but perhaps a better name for Wilder's RSI would be an internal strength index, right? And the RSI compares the price relative to itself. So it actually is really different, but yes, he was very, very brilliant. Okay, I will stop ranting. So Tone.
Yes.
Sure. Let's see, what is going to be the most fun one to ask you today? You're kind of running out.
I have no plans to visit Putin when I go to Europe in September.
Okay. Okay. Yeah. Okay. Well, just following up on the RSI then. Okay. And yeah, I don't have a baby except for Thor right now in the background. If you guys hear squeaking noises, I'll take crypto gatherers again. Is RSI the final indicator that the bottom is in, Tone? Say we bounce off of 5K, will the thought be that this is only a temporary bounce unless the RSI dips below 30? Continuing.
That's actually a good question. I mean, the RSI is really not the most important indicator at all, ever, but it could be used to help. So I highly doubt that the RSI would go big oversold if we go to 5,000, right? To me, again, if I go to the weekly chart, and if we go to 5,000, this would be my 5,000. This would be the equivalent, right? Like to me, this candle from September 29th weekly. Oh wait, I am screen sharing. This candle from September 29th weekly chart that had a low of 275 and a close of 325. To me, this candle would kind of represent the RSI at 30. So if I magnify the RSI, to me, the $5,000 low would be equivalent to, here we go, would be equivalent to this RSI reading. You can see how it just touched 30 and bounced off of that area and went exactly to the level of the prior breakdown, right? So again, if the same picture is to play out, right? And keep in mind that right now, the RSI is slightly higher than it was back then. Like if I extend this line, you can see how it's coming in a little bit lower, right? And this, you see, this is a straight line. And it's not perfect, but it's almost perfect, right? The RSI went to 30, went back to the breakdown level, it got rejected, made a lower low, got back and got rejected, made a higher low, and then broke out and then used it as support, okay? So if we replicate this event here, right, I am looking at a breakdown of this line, giving you a low in the RSI along with the $5,000 bounce back to this line. But I think this RSI reading will still be somewhat above the 30 mark. Now, will that be the ultimate low in RSI? It's possible, but statistically not likely. Statistically, we're going to bounce back to this line the way we did, and then make one additional low. Now, there will be a big problem here because me and Tyler Jenks are going to be completely different here because Tyler feels that if we bounce off of the $5,000 area, we almost have to go to new all-time highs, because if we don't, he has zero chance of Bitcoin, not zero, but like Tyler becomes way more bearish than me. Like I still think that Bitcoin's $5,000 low will not be the ultimate low of this bear market. I think there will be a lower low. There doesn't have to be a lower low, but I think that there will be a lower low than 5,000. But I am open-minded to that low being anywhere between 1,300 and 5,000, anywhere in that zone. I'm open-minded to that. My most likely, of course, is 1,300, but it can bounce off of 3,000. It can bounce anywhere, like 4,200, 2,500, just anywhere. And I would be perfectly okay with that based on my TA. Now, if we don't bounce off this $5,000, I think it's wave 2, level 2, hyperwave, right, Leah?
Phase.
Phase 2, thank you. And it is 2, right?
I can't actually see your chart.
Oh, which
I
no, I
had
don't
it small to look at the live.
No, it's RSI. I'm displaying RSI.
Yeah. Okay. So you're just talking about dates right now?
Yeah. No, I'm just trying to explain to people like Tyler still thinks
right
that
now it's 7. So like we're done with the hyperwave, actually.
We are?
Completely.
Oh.
Yeah,
okay.
hyperwave's done.
Okay. So
unless we go back into a new one, but
right. But anyway, like maybe I'm going off on a bit of a tangent here, but look, to me, a drop to 5,000 will be equivalent to this RSI point, but I have a feeling that it'll be even higher. Now, can a weekly Bitcoin chart drop to 5,000 and have the RSI below 30? Is that possible? Yes, it's possible. I think it'll have to be a much longer bleed. I think that my target for 5,000 is early July. Now, if that 5,000 target gets delayed into, let's say, August or September, then it's actually possible for a drop from 6,800 to 5,000 in September as the RSI goes below 30. But if we drop to 5,000 in the next 4 to 5 weeks, I think the RSI will stay above 30, which means I will be expecting another low. Now, this was a very tricky low because remember, the price at this low was lower than the price of this low, which at the time would have given most people, including myself, the impression that yet another price low is coming, ideally with a higher RSI reading to give you divergence. That didn't happen. We got a higher low with a higher RSI telling you, hey, maybe it's time for us to go up, but you can't time the dip as perfectly. I don't know which one is going to play out, but this is just too uncanny to what happened in 2014. Like, I'm looking at the RSI, right? Like, let's forget the fact that this is Bitcoin. Let's forget what asset this is, right? This is what I'm seeing is going to play out. Anyway, I think I'm rambling on in this question. I think people get the point.
Okay. Well, following up on RSI, you got a question of why don't you use a stochastic? Oh my God, I can't say it this morning. Stochastic oscillator. Yeah, oscillator.
Because there's only so many oscillators I can fit onto a chart, and I can look. Stochastic is something I studied in the past, so it is something I'm familiar with. I mean, we can add it and take a look. I'm not even sure it's in my favorites because I haven't like really used it. Oh, there it is. I'm not an expert at stochastic RSI. You might want to go find Vincenz for that. So yeah, let's take a look. I don't like that purple. Let's get rid of it. So here's the weekly stochastic, and here's the 2014 market, right? And here is that. So look at this divergence, right? So this was actually very nice. So if you used the stochastic on this, right, you can see how this was the April low coinciding with our April low, right? Now, this was the September low. So if I pull up the chart, here is that September low. This is what I am going to call the equivalent of a drop to 5,000, okay? And if we go to stochastic, you can see how it made a lower low. Now, when you have a lower price and the stochastic is giving you a lower low, my interpretation of this is I am waiting for another low in price. And if I'm lucky, my stochastic will give me a higher low, creating divergence. And that's what happened. Here is the January low in stochastic that was higher than the September low in stochastic. And the January low came at a lower price. So unlike the MACD and unlike the RSI, the stochastic actually gave you divergence because the price was lower in January. And then the price made a higher low in August, which was this. That's weird. Oh yeah, right here, August, perfect. The price gave you a higher low in August back when it fell below 200 again. And look how much higher your stochastic is. So this was the divergence point, and this was the confirmation point. We are going into our second point. This was the September low of 275 intraday and 325 on the close. And this is what we're going into, I believe will be 5,000. And I think this will give us a lower stochastic reading. And then it's all about what is the next point? What is the point after the $5,000 low? Will it be a lower price with higher oscillator readings giving you divergence? Or will it be a lower price with the lower oscillator readings, not giving you confirmation? So if you get a lower low than 5,000, let's say the low after 5,000 is 4,000 or 3,000, it doesn't matter, right? Let's say you get a lower price low and a clean lower price low. And here's what a clean lower price low means. a lower intra-candle spike and a lower close. That is what you call a clean low. What happened in April is not a clean low. It's a very crappy kind of low, right? Because man, I want to clean up this chart a little. Right? Let me show you what I mean by that. Yeah, I'll go to the weekly chart or the daily chart, a little cleaner. Let me take all of this out. Let me take all the noise out, and let me magnify this. Right? Here's what I mean why it's not a clean low. If I change this to bars, and actually, is there a? No, that's it.
I love bars.
Oh, really?
Yep.
Yeah, I'm in Ireland, so I have to as well. Right. So if I change it to bars, you can see like forget about these notches, right? I know I can get rid of one of the notches. I can like here. I don't want to mess with the color too much. Anyway, so look at the bars, right? If you look at the bars, you can see how the low here is lower than the low here based on a bar chart. But if I change it to a line chart, you can clearly see how the low here is lower than the low there, right? So this low in April is not a clean lower low. It's a really crappy low to analyze. It really, really is. So so when I say that I'm expecting a low at 5,000, and then I'm going to expect another low, but is that going to be a clean low? And it can be a clean low lower. It can be a clean low higher, right? So I hope it's a clean low higher with a higher reading of RSI and MACD, giving me confirmation that the 5,000 low is in. If the low after 5,000 is lower in price and higher MACD and RSI and stochastic, that will give me confidence that we have divergence and the $5,000 low is in. But if the low after the $5,000 low is a clean lower low on the price and lower MACD and lower RSI and stochastic, now it worries me that the low after the $5,000 low may not even be the lowest low. There could potentially be yet another low, and I'll keep waiting for that divergence. Now, in 2013, that divergence actually did not come. We didn't get divergence in 2013. If I go back to the oscillators, this is the daily chart. If I go back to the oscillators, you only got divergence in the stochastic, which I'm looking at for the first time with the full parameters, of course. But the RSI and the MACD did not give you divergence because the secondary low in August, which was a clean higher low, the intra-candle was higher and the close was higher. It was a clean higher low with clean MACD and RSI readings. Now, keep in mind, I am fully aware that the RSI and all of these oscillators couldn't care less about the intra-candle spikes. They only use end of candle closes. I'm fully aware of that. But it makes it a lot easier to call a low or a high when the subsequent highs or lows, whether they're higher or lower highs or higher or lower lows, when they're clean, when the intra-candle is higher than the prior intra-candle, when the close is higher than the prior close, the opposite for the lows, okay? Much easier to read charts when they're clean. So your stochastic is looking pretty damn similar to what happened here. In fact, it's weaker once again, right? Like I continue to say how the current bear market is weaker than the 2014 one, which I don't know why makes people think that they have to be like be even more bullish when I say that, because look at what happened in the stochastic. In early summer of 2014, and we went all the way back to the upside. Well, we only went halfway here, and now we're back touching the bottom. So again, this the late September low in 2014 is going to be my equivalent to the $5,000 low in Bitcoin in 2017. I hope that will be the low for the rest of time, right? But the technical picture will not be able to let me definitively say that until either a higher low shows up, or a lower low obviously will make that, render it useless. All right, let's move on.
Okay, I like the next question. Also, because you just taught your seminar yesterday. When you miss your daily entry, 2-day trading above, below a 1, do you wait for the next daily entry, or do you find an entry on a shorter time frame? I don't want to chase a trade.
Yeah, you don't want to chase the trade. Like, if you miss the daily entry, but then you end up in a situation where you missed it, and but the price is now like better for you, you can still go in, right? So don't get scared, but that's not what you're talking about, right? So if we look at it on this side, right? Like, if I missed this daily short entry of a red 2 below a red 1 for a short play, and let's say I just woke up, I would let it go, and I would consider the following day on a red 3 below a red 2, but only because I'm expecting shit across other time frames to snowball lower, because I think this low is critical. So at this point, I would wait for a 3 below a 2, but I'm not going to be happy about it. On the flip side, over here, if you missed your entry of a 2 above a 1, you can certainly enter the following day at a much better and lower price, right? And this way, you're not chasing it. You're actually getting a better fill the following day based on that, but you missed it, so you get in over here the following day at a lower price. At this point, I would let this day play out, and I wouldn't mind going in on a red 3 below a red 2, but perhaps with a smaller position size, right? Also, if you weren't sure about this red 2 below a red 1, you can go in with X over 2 of your position, and then you would double down on a red 3 below a red 2. But because you didn't enter it the first time, maybe your trade on a red 3 below a red 2 should be that X over 2 position that would have been your double down position, but that becomes your actual position. So now you're late to the trade, but your risk is halved because you're investing less money.
Great. This is just a fun one, and I think we'll end on this one. What is the relationship between the stock market and crypto market in your eyes?
I don't think there is much. I think there's very, very little. It depends how macro or micro you want to go. On the grand macro scale, I think there is a bit of a relationship, is because the stock market and the crypto market are both private assets, with the crypto market being even more private than the stock market, right? Because we call the stock market private, but yet they're public companies, right? But they're not really public, like the government bonds are public, right? But on a grand scheme of things, this is what bothers me, right? So people keep saying how the stock market is overvalued and needs to crash, but the Bitcoin market is undervalued and needs to go up, when in reality, it's the same forces. It's people wanting to run away from government bonds and run away into private assets like the stocks and Bitcoin. In addition, people always say how government is printing too much money, and therefore gold and Bitcoin have to go up, but for some crazy reason, the stock market has to go down. But if the government is printing too much money, where do you think most of that money is going? It's going into the stock market because of the money printing. Or it's causing inflation, which means companies have to raise prices and salaries, and therefore companies are making more revenue in order to pay higher salaries because of inflation. So on a macro scale, the stock market and the crypto market should kind of be more correlated than uncorrelated. On a more micro scale, some people may like the fact that, hey, I just made a bunch of money in the stock market because it's at an all-time high and Bitcoin just had a 70% correction. So maybe I can rotate out of the stock market and rotate into Bitcoin because they're both private assets. So it's more like what me and Tyler talked about the first time I had him on the show. He's big on sector rotation. Like the tech sector has been booming for a while, and the utilities have been the dogs of the stock market. So you're still a stock market investor if you rotate from tech because you made a bunch of money in tech into utilities because you think utilities have been underperforming and there's always sector rotation. So there can certainly be some rotation from stocks to crypto if Bitcoin falls low enough and the stock market continues to make new highs. But please don't make the mistake that of the macro picture that the stocks and crypto are more correlated against public assets like bonds and government printing than you think they are.
Sounds good. I think we'll end it there. Also, besides the Guinness, apparently you're going to get trouble if you don't try smoked cod and chips. And we have a recommendation here for a restaurant.
No, but those are paleo. I can eat those.
Good. I'm just saying you better do it before you leave.
All right. I like fish. I'm a big fan of eating whole fish.
Yum. All right. Mr. Tone, have fun with Max and Stacy.
Thank you. Once again, guys, if you like my work and you would like to support my work, please check out the affiliates section of tonebase.com. And I had a great workshop here in Dublin. It was nice and small, had about 10 people, actually less than that. It was nice and small, it was great. One seat left for London. So you may want to jump on that. I'll try and, maybe increase the size of the venue by a few people. But yeah, that one's definitely going to get sold out. And I'll be off to London, I believe, on Thursday. All right, guys. Thank you very much for watching. Thank you, Leah, for hosting. And thank you, Ty, for joining us for half the show.
See ya, everybody.
Bye, guys. You have to look at Leah one more time.
No.
Full screen.
Bye, everybody.
And literally in full screen. Bye, guys.
No.